Okay, right. Hi, good afternoon, everybody. Welcome. My name is Niku, and we're going to be doing some trading today, guys. Welcome to the stream. Before we kick off, that you don't understand, ask the questions, join the chat. Don't be scared or shy. Anything that you guys need to know that you don't understand, if I'm saying something, please just even if you just pop into the chat, say hello, and let's see if we can get you guys give you guys a little bit of an edge when it comes to the charts. Okay, guys, today I'm going to be discussing a very interesting phenomenon. We're going to look at Fibonacci retracements, and it's a very curious tool when it comes to trading. There is absolutely no reason, mathematically at least, that this should work on any chart, but curiously enough, it actually does. It's a wonderful tool. It is mostly, we use Fibonacci retracements to gauge the retracement of corrections in a trend. Okay, so that's in a nutshell. So we're going to use it to identify potential areas where we can enter positions, and it's used as a supplement to whatever strategy you are using to enter trades. It's a very simple thing, and yeah, it is actually a very good tool. So without any further ado, let's have a look and see what it offers. Okay, so Fibonacci lines cannot be used as a strategy by itself. It's merely, it's very useful though to identify areas where you could get potential trades for your trade entries for your strategy, whatever it is that you are using. So let's have a look at how we set up the Fibonacci retracements. Okay, so Fib retracements will be, if we're in an upwards movement, it will be from your most recent low to your most recent high. And if we're in bearish movement, it will be from your recent high to your recent low. In this case, we had a high here and we had a Fibonacci pullback, or sorry, we had a price pullback. And we're going to set up so that our two main lines connect at the bottom, at the low, and at the high. Actually, we could do this. So that was the high, most recent high, and this was the most recent low. And now what we can do is see if we can find, if we get an entry, if our strategy gives us an entry right on one of those lines. And it is amazing how often this will actually occur. So let's see if we can find a trade. I'm going to be using, I use three strategies when I'm trading. The first strategy that I use is divergence. So we're going to look for some divergence trades now. We're going to look for DI spikes on the ADX, where the ADX itself is very low, meaning that there's very sudden price movement, but there's no strength behind the movement. And then we're also going to look at the RSI middle line, where if price is moving in a direction and we get retracements, or we get corrections in the movement, if this correction happens on or very close to one of the moving averages, and at the same time the RSI hits the middle line, gets rejected, we're going to do a continuation trade. And this is especially an area where the Fibonacci retracement is a really powerful tool to show us areas where we can expect to find trades. We are currently 5 minutes into the US session. So we've got some data coming out at in 25 minutes. That would be, we've got unemployment claims coming out today, and we have, I believe it's the CPI coming. at 2:30, so that's 25 minutes from now, and we can definitely expect some movement. And what we're going to do as well is see by the time the news, the data gets released, we're going to have a look at what the Fibonacci levels are. And if there is a sudden movement in price, which today we expect a fairly decent move in price, then we're going to have a look at where on the if the Fibonacci plays any role, if the retracement levels plays any role in where price decides to stop or take a rest, or maybe even turn back. Okay, so we are currently making new highs. So this is going to be my recent low, and then this will be my high. Let's do it like this. Okay, so now let's see if we get a retracement that will maybe coincide with one of our strategies, so we can get an entry. And it does look like we're going to come down to the 618 level, which is kind of the most, I don't want to say most popular, because it's not something that's chosen by people, but it is a common area for price to take a rest and maybe often turn up again or reverse a bit. So let's see, it looks like we're setting up some divergence. We do have a bearish setup building here, and if this also acts as a kind of like a support and resistance area. So let's have a look, see if this turns down, then I'm going to take a sell trade here, and we should see a retracement. I'm just waiting for confirmation from my stochastic to see if the divergence does form. Currently it's valid, but it could always go any way. We never know what's going to happen. So let's have a look. Okay, so my divergence is voiding. The stochastic is pushing up way too much now. That's the new high. The one thing about the Fibonacci retracements is that you kind of need to keep them updated as you go along. Let's see, this looks like it might give us. So I've got the 50 retracement at the moment is smack dab on 2 of my moving averages. So there's a very good chance, looking at this, that we're going to see a rejection either from 6.618 or from the 50 level. And it looks like 618 was the area, or not. It is fresh into the US session, so there is usually a little bit more volatility. I'm always a little bit extra cautious when an exchange open or when data gets released, because we know that we can expect increased volatility for a short period. And that's why we're not just jumping into trades here. We're going to take our time and see if we can find any nice entries. But it's very interesting to see how this 618 area is holding at the moment. It is really giving decent support there. Okay, guys, and if you guys are here, if anybody's watching, I have no idea how many people is watching the stream because I can't see the actual figures, but I can only see the chat at the moment. So if somebody's there, say hi. And again, please ask questions. This is a great time to get those questions out. So we're going to sit for a second and see if we get any entries anywhere. But this volatility is kind of like putting a pause on our trading. We're hitting the 50 line right on the 100 moving average. Let's see if this breaks. So we're going to be looking now to start moving our fib retracement lines as well. Because clearly we're in a downwards move now, in a bearish move. Yeah, this will not be a trend, it will just be a bearish move, because we in a bullish move we see higher highs and higher lows, and in a bearish move we see lower highs, lower lows, and we are currently doing that. So what we're going to do now is we're going to stay on, we're going to leave it as it is until we get a new low. So whenever price starts going up a little bit, when we get another correction, then we're going to adjust our Fibonacci lines to the new low. Let's just see what happens. Also, guys, a friendly reminder, please don't try to copy the trades that you see me take. If any, there is a small delay on the stream, so you are behind a little bit. Okay, so there's the new low, and price is pulling back. So now we're going to move our fib lines to that area there. And we're going to see if we can get a sell. This is actually looks like this is going to be a sell trade for me. Okay, so the reason I took this is we're in a downwards move. My RSI came up, and I jumped the gun just a little bit, but it was right on the 382 level. And this is actually a very good example why you shouldn't rush your trades, because I was betting that it's going to reject off the middle line there, and we're going to continue downwards. And it's never really a good idea to take entries outside of your trading parameters. But let's see what happens. Might actually get lucky. Okay, we did get lucky. It happens sometimes, but it was still a very bad trade. In my, I see it as a bad trade because I did not wait for my strategy to fire. Okay, let's have a look. But it's very interesting to see where on the fib retracements we drew in when price was still here, how it's sticking to the areas. And this works on any time frame. You can use this on a 1 minute chart, a 5 minute chart. It really doesn't matter what your time frame is. Whatever you prefer to trade. We might actually have a look at okay, I'll have a look at the 1 minute now, just to show you guys it's excuse me, how your behavior will be the same on a 1 minute chart. But we are moving upwards now. We're definitely in an upwards, in a bullish move, so we're going to adjust this fib again to see if we can get any retracement opportunities. So basically, if we look at the way price was moving here, this is a retracement, and this is a retracement, and even this is a retracement. So this is what we use the Fibonacci for, is to try to determine once price starts making a retracement or a correction, we use the fib lines to identify potential areas of the low of the correction or the bottom, to see where price could maybe turn. Looks like we're going to keep making highs now, and it's still pushing. Does look like we might get a little bit of a divergence set up here. If price doesn't go any further, we could get one, and that would give us a sell trade. We might still push to this area though. If it happens, it'll happen here. It doesn't look like it's going to happen anymore. We're in a very, very strong push right now. So let's now just wait and see if there is a retracement. So once it starts coming down again, we're going to move our one line or our main line to this area here. So we're going to do it like this. There we go. Price looks like it's coming down. If not, we'll just adjust it again. But we are still going from the recent low, the low of the current move. Right, so this is the current move. This was a bearish move, and now we're in a bullish move. So we always keep our Fibonacci retracements on the current high and low. I will not put it, for example, this is not considered a low, this area here or this area here, because it's part of the bullish move. This is the first low of the bullish move. Okay, so this is why I'm still here. My zero line is here, and my number one line will be the one that I'm going to place right on the high of the current move. So then we're just going to look for retracements, and if we get a retracement and it coincides, it will tell me, especially the 618 line. The 618 line is very, again, it's the word I'm looking for is not popular, but it tends to get hit a lot, quite a lot, the 618 line. So I know if price does come down now, I need to be alert, especially in the 618 area. But for every area here, I need to be alert, because I could get a possible entry from my trading strategy, and if it does reject off that line, and it at the same time that coincides with a valid entry from my strategy, that's when you have to take the trade. So yes, let's see. Again, euro is pushing very hard at the moment, although I suspect this is not necessarily the euro that's strengthening at the moment, but this rather looks to me like dollar that's weakening. So if the dollar is weakening, euro USD will go up. If the euro is strengthening, euro USD will go up. If the dollar is strengthening, euro USD will go down. And then lastly, then if the euro is weakening, euro USD will go down. Okay, so this is definitely divergence for me. There we go. Okay, so I've got some bearish divergence on the chart. So I expect we're going to see a retrace, maybe 786, but probably 718. The reason I expect a 718 retrace here is because the moving average, if price comes down, that's going to coincide with my 50 moving average. But we definitely had the divergence here on the stochastic, and even my RSI was making lower highs, confirming my trade for me. Another thing to look at also is the way that the DI is losing speed and my ADX is turning downwards. So let's see if this is going to be the bounce or this. Okay, this is a good trade though. Let's see what it does. So these are the retracements we look for. And if this will now get to So that's not divergence. Okay. We are still currently in a bullish move. Even though we made a lower low, this is still a bullish move because this could still go up. But if we do make a new low now, and then we can consider that we are entering a bearish move. So we're not gonna what's the word? Rush into changing our Fibonacci retracement areas. We're leaving it as it is, but once we get a confirmed change in direction, then we will adjust our Fibonacci lines. Okay. Looks like we're still heading north. This is just a area where price might be resting a bit. It's difficult to tell. We never try to predict the market though. We're just gonna follow what it's doing, but it does look like we are gonna like the resistance is gonna be holding anyway. We do have some decent resistance areas here. RSI is also not clearing the middle line, although it's flirting with it. It's up just over, just under, just over, just under. And this could go either way. But we don't try to predict what the market will do. We're just merely trying to follow what the market is showing us, and then simply follow what the market is doing. Okay, there's a new high. So we are still continuing upwards. We are 8 minutes away from the data as well. And I do expect a lot of volatility when the data gets released. And I kind of suspect we're going to see a very big upwards push, but that is just a guess. I'm not going to trade. I don't trade guesses. So please do not enter any trades because I think we might go up. But I do think the dollar is going to be weakening a bit. So yeah. And as we're nearing elections, we're seeing volatility increases. Yeah, we're 2 weeks away from the US election. That's going to be interesting. So yes, I think it would actually be interesting to hear what people think will happen with the US elections. I think the dollar is going to strengthen. We're going to should see a decent increase in the dollar right after the elections. Okay, so this is on the most recent high. We're still leaving our Fibonacci line here because we did not have a downwards move. This was basically sideways. So we can keep this here and see if we can find some more trades, but it's 5 minutes to go to the data release. And I'm just a little bit extra cautious when it comes to important data. I am not, I know there's a lot of guys that love trading the data results. Personally, not a big fan. I like to just give it a minute or two after the numbers hit to see what the market is doing. Are we getting divergence here? It does look like we're getting the same setup as we had here is forming on the RS stochastic and the RSI, but we need to wait for it to form and confirm that it is making divergence. If that doesn't take too long, I might risk another trade. We do have some time left. That's a big candle. It's a bit late to get in now. Maybe not. Let's take a sell. This is confirmed divergence, so we should go down a little bit. Not necessarily a full price reversal, but we can see, we should see a little bit of red, and straight through the 786 line. Let's see what this 618 line does for us, if this is going to hold. Trade's going to be good. So let's wait and see. Okay, so also, guys, I have an exclusive promo code just for this channel. So with those of you trading with PO Broker, you can use promo code NICU75 for a deposit bonus. Yeah, so if you guys are with PO Broker, it's a very decent deposit bonus, so make use of it. Let's see, with 3 minutes away, 2.5 minutes away, almost 3 minutes away from the data release. And again, price just stopped just right above the 618 area. It's absolutely so amazing. We're going to adjust this actually to the high, and if we do, we can see it tapped the 618 area exactly and got rejected. This is also the reason you cannot take trades just because price is on a Fibonacci level, because even though it might get rejected for a candle or two, there's a good chance that it's going to continue. It doesn't mean it will reverse from that level. Let's have a look at the 1 minute, because we are getting we do have the data coming. So let's see if we look at the 1 minute. So this is our current move on the 1 minute. We're going to draw in our Fibonacci retracement on that. So that's the high and that's the low. There we are. Just up a little bit. Okay, so it does look like we're heading downwards on the 1 minute. Not heading downwards, we are testing the support area. So we're gonna have to sit tight, but the data is gonna hit in no, it's 1 minute. Data's gonna hit in 1 minute. I'm not gonna take any trades right now. Brainy trader. Hey, what's up, man? You have a question? Absolutely, go for it. If I can answer, I would, or I will. Okay, so the 236 line is holding for now. And we are getting data in 20 seconds. So let's see what the reaction is going to be. And maybe we can get a trade in. Maybe. There we go. We're seeing the increase in volatility already. And here's the data. Okay. Lots of indecision. Brainy trader, you can type out your question and let's hear what it is. Happily I'll answer that for you. Interesting where the push is upwards from here, where it got some resistance was the 618 area as well. Again, 618 seems to feature quite a lot in Fibonacci retracements. You will see it very often be a important support area or resistance area. Okay, but we didn't have a. Sometimes you have a very. The reaction to data is that price will just jump in one direction and keep going for a few seconds. Sometimes on movement like that, I will actually take a reversal trade. But movement like this, where there's so much volatility and we see long wicks on both sides of the candles, I do not. There's no way to gauge and be able to take a trade there for me. I know there's, like I said, I know there's some guys that do trade the news, but I just, if I don't have a decent entry, I just stay out of it. Okay, it looks like the bulls are coming in now. Okay. So we didn't actually get that much movement from the news. I was honestly expecting a lot more volatility. But that's the way it goes. We cannot predict. Okay, Brainy, you're asking about divergence with the ADX. Those two are not related, my friend. Use an oscillator for divergence. An oscillator is something that either moves between 2 points or revolves around the center point. The CCI, for example, is an oscillator because it revolves around the 0 line. The stochastic is an oscillator because it moves between a value of 0 and 100 and it cannot go outside those areas. So if you're looking for divergence, we had two very nice divergence trades a while ago. So that's, and I used the stochastic and the RSI for those, not the ADX at all. I never used the ADX to find divergence because it's not an oscillator. It's not an oscillating indicator. There's no, the ADX has no set values or no limits. It, in theory, can continue indefinitely. There's no upper limit, and it's not moving within a set value or around a point. Okay, I hope that answers your question. And it's just practice. Okay, so the data kind of messed around the chart now. Is this currently, this is our high? Where is that 618? Yeah. I expect we're going to be seeing a little bit of volatility for a few minutes now, until the market settles. I wonder what the figures was. Let's have a look at the figures quickly. Okay, so unemployment claims was lower, good for the dollar. Core PCE price index was as expected, and employment cost index was lower than expected, which is not good. So that's why we had the conflicting movement. We had some of the data was good, some of the data was bad, and that was being interpreted different ways by people. That's why we got the up, down for a bit. But it looks like everybody has settled on, for now at least, that the dollar is weakening. So the news might not have been interpreted as that positive. Okay, let's go back to the 10-second chart and see what this looks like. Okay, I just want to get this off here. So technically, if we were to draw in Fibonacci retracements now, we will use these levels here. So that would be the high, and then this would be the low. So let's have a look and see if we can find, maybe get another entry. We had 3 trades in this 30 minutes. All of them ITM, which is awesome. I love it when that happens. We do lose trades. It's part of trading. We will always lose trades. We will never win all our trades. But if we stick to our strategies and we stay within our strategy parameters, we'll do fine. We don't get excited about losing entries or trades. Okay, but it's a bit difficult to read now with this data. I'm going to pop on over to the 1 minute again, see if we can maybe get an entry there. We might. Okay, so data release kind of messed up the charts for us. So what I would do now is take a half an hour or an hour break at least, wait for the data to, or wait for price to settle down, take the data into account. And then once everything is running smoothly, that's usually when I start trading again and start looking for entries. Because it's very difficult for me to read the chart as it is at the moment. Okay, so I really don't think we're going to get any more entries really right now. No divergence forming anywhere. We're breaking through, or at least flirting with the moving averages there. So this could go either way, probably down. But there's no way of telling. Okay, so I hope my explanation on Fibonacci retracements made sense at least. And I really hope that you guys will be able to use this as a supplement to whatever strategy it is that you're using. Like I said, it's really great to identify areas of potential setups. And if you are and if you do use them, just remember, find the current move, whatever move we're in, bullish or bearish, and use those lows and highs to find your retracement levels. It won't help if I put my Fibonacci retracement levels on a level here maybe or something in the past. We only use the current move to find the current high and low, or the high and low of the current move. We're going to use that to find the retracement levels of that current move. Okay, so that's the way we use Fibonacci lines or Fibonacci retracements. And like I said, it's one of the most amazing tools for me because we cannot mathematically explain why this actually works on a chart. There's no reason for it to work, but it does. It is a very popular tool. There's a lot of people that use Fibonacci retracements because it works. So if you use it correctly, it can be a very nice supplement to your trading strategy and your trading regimen. All right, so guys, with that, I'm going to say good afternoon to everybody. Remember, guys, those of you that are trading with PO Broker, you guys can use that promo code. That's on screen now, Nico75, for a very nice deposit bonus, and that's only for this video. Right, so it's only for us if you joined into this video. So if you are with them, make use of it if you need to. And yeah, I'll see you guys sometime next week on here. And yes, wish everybody a good weekend. And with that, I'm saying goodbye. Have a great day. And as always, guys, trade smart and trade safe.